You sound like you got that long COVID going, bro.
Yeah, I mean, my wife and I are both waking up fatigued and whatever. I'm not gonna sit here and bitch about being.
No, fuck it. Yeah, I'm tired too. I was working out yesterday.
Oh, good. That's awesome.
You know, you're getting old when you're doing curls and stuff, and your legs are sore the next day.
Now we've been working out daily. I didn't yesterday, but we have been at least cardio. So every day for a few months.
That's the most important part.
Yeah.
In my mind.
Yeah.
So
we got some inflation numbers and we got a bit of a dump on the market today. What's your thinking, Joe?
My read is okay. The issue on the CPI print number, it is lower than last month, but it's not as low as people forecast. So people adjust. Right. And the reason they're adjusting now is because now they're trying to figure out, well, the back end of this FOMC rate hikes, is it 50, 75? You know, and I mean, I even threw out there potentially, 100. But it seems to me that, this is a good thing to me because it takes out the speculation. It takes out the people that are worried. There's always somebody buying on the other side. I don't think it's as bad as I say, because the whole thing was, CPI was 8.3, I believe, expected 8.1. Last month it was 8.5. But the core inflation rate was 5.9, or no, excuse me, 6.3. I think it went up from 5.9 to 6.3, primarily on mostly housing costs. A little bit of food, but not much there, and gas is going down. The Saudis bumped production over 11 million barrels a day without a big announcement. They're pumping. Price Morgan Stanley and UBS both say the price of gas is going down. So the real problem to me looks to be rental costs, housing costs. I don't know in that CPI number if that's just rentals or if that somehow includes ownership of houses. And I don't know I can't really see how that would work, but it seems to me that it's about rent cost. And so you see transportation up, you see all the other things up, but to me, those are the ones that are all kind of tied together.
Sean said every category of inflation increased, but energy, and energy looks like it could pump.
Is he talking about U.S.?
I guess. I would assume so.
One second. Let me just pull up my chart.
I don't know.
I'm trying to find this.
I haven't had time to look at it.
I think I had it in my Twitter feed. Yeah, here it is. Here's all the categories. If you look in my feed, Pathfinder 305, you'll see that really they didn't all go up. Energy, commodities, energy overall decreased -5 this month. Gasoline -10. Fuel oil -5.9. Used cars actually went down a little bit. So you don't see it there. Where you see it is transportation services in the services sector. And then you see some other stuff down there, medical care, but not as much as transportation. You see it. I'm looking at the year number. You see it in vehicles. But the year numbers are bad, obviously, on energy services, fuel oil, gasoline, all of that. But that's going down. Food actually went down too. July was 1.1. Now, these are monthly numbers that I guess you would annualize. And then in August, it was 0.8. Food at home was 1.3. And then it went down to 0.7. Food away from home was 0.7, went up to 0.9. So restaurant prices are going up, yes.
Right.
But to me, it's the core stuff. So minus energy and food, that's what went up. So that's all the other stuff that we don't focus on. And that's troubling. That is a little troubling, I admit. But I think if I saw some stuff on people converting commercial real estate in Texas into housing, of course, high-end condos and things like that. So I'm starting to think maybe there's going to be some adjustment there where you're going to get some commercial converts over to, rentals. Something that brings the price down. I mean, that's the one thing is the biggest thing to me. So I look at it as, it's not end of the world news. I don't think. I mean, I actually looked at it as, okay, whatever. Nothing big. But it gives everybody an excuse to do what they're going to do, trade it out or do whatever. Yeah. I mean, I looked at the charts on Bitcoin and ETH earlier today, right after the CPI print. And of course, you saw that cliff right there. If you're looking at 1 minute candles. But then you brought out, it's not that much, it's not like, so again, any other news, I think rallies this in any direction. But, Sean is, I know what Sean thinks is going to happen. And I tend to think that's going to happen too, eventually. But deep V is my perspective. I'm not looking at a bleed out long-term decline. I'm looking at it as a big rebalancing. So to me, that was just the first event of this week. We got the Senate hearings, we got, of course, the merge, and we got the FOMC stuff. So
it's interesting. Prior to this dump this morning, I'm assuming this thing comes out prior to it. The fear
came
and
out
greed,
at 8:30. Yeah.
Yeah, the fear and greed index had made its way up to 34. So I'm assuming they only update this once a day. So I'm assuming it'll head back down to 25, but it was 25 yesterday. So it had a 9-point climb yesterday, which is a little fascinating to me, but that was also on those rises that were happening yesterday in Bitcoin and Ethereum prices. So anyway, look, I mean, we are, where are we on this? 1 day, 12 hours, something like that for the merge. Yeah. Oh, look at that. 1 day, 11 hours and 59 minutes. Until the merge, people are trying to game it in both directions. I am not personally going to touch the proof of work shit just because I don't trust those folks that are forking. And so I think they'll fuck it up in some way or another. There are risks to it as well. So, not something I'm even going to mess with. It's trading at like $18 right now on futures. And you can fully expect that within minutes of the merge completion, every whale and their dog will be dumping like a motherfucker of that shit on the centralized exchanges. So I'm not going to bother with it. I'm not going to burn my chain binder NFTs to get that ETH out beforehand.
Hey, what happens to if you have a short position on and I guess the fork happens and now we have the two ETH proof of stake and ETH proof of work. Does the short stay on both, or
it depends. It depends on if that DEX is functioning and existing and real on the other side, right? I mean, and that's what makes the proof of work fork such a joke, because there's no way in hell they can shore up every friggin' DeFi project on the fork. I mean, there's just no way. They can't. There are too many holes in the network that require something functioning, especially oracles, for anything to work properly. So my feeling is shorts, longs, I don't know that any of it's going to matter, because I don't think that chain's going to last more than 10 minutes. I mean, I'm exaggerating, but I just don't think anything's going to function.
So what happened with BCH then when they did that fork? I mean, why? I mean,
well,
BCH was why?
Yeah, BCH was an easier fork because there's no DeFi.
Yeah,
there's no DeFi on Bitcoin. Right.
Got
it. Especially then, there was nothing. I mean, at least now you have Stacks and a few others, but there was nothing to shore up. Right. It's just the token and the chain. And
so there's no. What do people do on BCH? I mean, I heard that you can pay for stuff in like an island in Thailand.
BCH, I believe, has added smart contracts after the fact. Okay. But they didn't have to keep anything up and running. Whereas the proof of work chain, I mean, there are thousands of dApps. Right? Yeah. And even the major ones, they're not going to have Oracle capabilities. It's a train wreck. And look, it's a grift. It's a total grift. That's all those guys are doing. So it's a grift. And they could have, like I said, they knew 5 years ago that POS was coming. 5 years ago, they could have put money into Ethereum Classic, which is a proof of work chain, kept mining, built up a DeFi, functionality there. They could have started a year and a half ago when DeFi was taking off and built up the same thing over there. Shored up some of these protocols over there, moved them over, forked them, copied them, cloned them, copy pasta, whatever, and had a proof of work chain that they could support. But that's what tells me that they're not serious, right? They don't really give a shit about keeping DeFi running. They just give a shit about trying to make some money in the short term on a quick, dump.
Yeah. But you're right. It's pretty much, I mean, the biggest problem here is how do you transfer, I guess, all the different protocol TVLs from proof of work to proof of stake, and I guess they're all going to migrate automatically, leaving nothing behind.
All of the contracts will be there. All of the contracts will be on the chain because it's a fork.
Right.
So those contracts will be there and theoretically functioning, like they should. The problem is they rely on oracles. They rely on all kinds of components and pieces that have to interoperate together across composable protocols. And most of them are just going to fail, right? The only thing that I'm seeing experts say, especially security experts say, is, maybe you mess with dumping whatever you have onto a centralized exchange and then sell it there as fast as you can to get as much value as you can for those tokens. To me, it's just not worth the risk and the pain and the suffering. So I'm not touching it. Not even going to mess with it.
Yeah, it's problematic. I mean, I've seen a lot of articles about
John said perp contracts move to ETH 2.0. There are a few exchanges offering ETH proof of work contracts. They're all live now. Yeah.
So you could go in and short it right now.
I guess.
Yeah.
Yeah.
Well, I guess if you believe it's going to zero.
Yeah. Niblet says it gives everyone the excuse to front one what they think everyone else will do. It's true. It's true.
Yeah, good point.
Very true. Let's see. What else did we have going on today?
There's tons of good news. I mean, the KKR stuff. KKRs. This is the breakdown, everybody, of the inflation rate. So you can find it on the CPI site. It breaks it out there on their official one. It's in my Twitter feed. And
you didn't put the link in? Did you put the link in our group?
I don't know if I put it in the group, but it's in my feed. And it's in the DeFi lunch feed too, because
that's what I mean.
Tag all that shit.
I loaded it. There it is.
Yeah, not Telegram. I mean, I put these in Telegram, but I also put them into DeFi lunch as far as on Twitter. Yeah. So look, I mean, I'm just gonna say it doesn't really get much bigger than this right now. $600 billion private equity fund, is putting a portion of one fund, tokenizing it, and putting on Avalanche. I mean, obviously the test. But still, I mean, this is 471 billion. This is they did it with Securitize
healthcare fund.
Yeah, this is pretty good. I mean, I like this. So you see
that's the Securitize deal you tweeted out earlier. Okay.
Yeah, exactly.
Yeah. Got it. Understand now. Wow, that's really fascinating. Now, are they doing it straight on the main chain, or did they do a subnet? They must have done it on the main chain.
I don't know, actually. I read.
So it's basically a securitized tokenized or securitized token of that fund available on Avalanche, but I'm assuming you have to go through KYC to buy it.
I would expect. But I think so. You got to understand, a lot of these private equity funds, they have minimums. I bet their funds are minimums of probably $250,000. I mean, some are like higher than that. Much higher. The real specialty ones. It might be lower. I don't know. It might be 25,000. Like I think the standard stuff is. But what is it? Working murder person? Yeah, that makes sense. So to allow individuals to come in who don't have $250,000 in cash to put down into an account and be able to buy fractions of private equity funds. And this is really important because one of the problems with private equity funds, and I've been burned on this before too, is that it's very hard. They're not liquid. It's very hard, well, let's put it this way. It's not easy to get out just like selling a share, let's say, or swapping some crypto. There's gates and you got to give notices. And I think usually it's like 90-day advance notice and to get refunded in the next quarter, at the end of the next quarter. So this kind of opens up PE, private equity, to small investors too. And, this is where I don't know how to say this the right way, but, a lot of people don't like to hear the words like backroom deals and, platform deals. This is where those all happen. Yeah. So at this level. So to me, I like this because it's opening up what is pretty much an exclusive financial industry to everybody.
Well, what I love is
not just this one, but more.
What you were just talking about, and the fact that they emphasize the increased ease of use for individual investors. Right now, it's as easy as a wallet and a token, and Whereas the other way is a nightmare of bureaucracy and bullshit. So yeah,
Right.
I think you're right. This is important. And I think it's
So,
pretty
but
powerful to see.
when you combine that with the other article I put out today, I think on illiquid assets for tokenization by 2030. BCG did most of this, and another group, I want to say like maybe APPX or ADDX or something. I haven't heard of them, but look, $16 trillion. Now this is things like private equity funds, houses. Right. This is stuff that you can't just go out and sell in 5 seconds.
Right.
And when we start kind of adding that into the say capital pool, as far as for capital velocity and allocation and market efficiency, I mean, this just adds a whole nother level to it.
Sure.
And if you look at the chart in there, scroll down, right there, that's the chart, and look at listed equity, unlisted other equity investment funds. Okay, that's the dark one.
Darkish one.
Yeah. So what? Is that about 0.4% or is that 0.7? That's equity.
0.4 here.
Yeah. So 0.4 of 16 trillion.
Right.
I mean,
well, and this gray area, it says, is other tokenizable assets.
Yeah, I don't know. That could be things like other derivative or esoteric financial instruments. I mean, I've seen people in all these kinds of funny deals from, where there's different tax rules, and you make investments for tax purposes, so you get to kind of carry the loss in different areas. These things can all be tokenized too.
Sure.
Where you'll be like sitting there going, oh shit, I got a gain of, whatever, X. I need to go buy some losses somewhere. I need to go get something where I can, shield some of this. So it really opens up a lot of choices for the individual person, as well as makes it easier for the institutionals and the ultra high net worth.
What's interesting is all of these securitized platforms are now finally starting to see the light of day. They've been working on this ship for what, 5 years?
Yeah.
6 years, 4 years. So that's interesting to see. In Singapore, it says the Monetary Authority will recently launch Project Guardian, a blockchain-based asset tokenization pilot to explore DeFi applications in wholesale funding markets.
I mean,
tokenized bonds and deposits to execute borrowing and lending processes on chain. That's awesome.
Yeah. So this is where, I've been really thinking a lot about, say, the whole industry and how, just what I think about Bitcoin versus what I think of everything else. And, at the risk of stating the obvious here, I don't see that stuff happening on Bitcoin.
Right.
Okay. So, I mean, it could, but I think for all the obvious reasons that everybody already knows, it probably won't. But so to me, that's where the real potential is.
Yeah.
And I'm nothing against Bitcoin. Bitcoin's the anchor, guys. It's the anchor tenant of the whole space. So, it needs to kind of stay that way in my mind. But everything else, I mean, you just see what is happening. And then you take that and you look at like all the genomic data and you look at those markets. I mean, I've seen Goldman Sachs numbers talking 35 trillion.
Right.
There's by 2035. And there's plenty of companies doing blockchain work with genomic data now, for both, privacy reasons as well as monetization reasons.
This is. I opened up the report.
Yeah.
I opened up the report that had that data about the tokenization shit, and this is fascinating. Who did this report? BC what?
I think it's BCG, Boston Consulting Group.
So
big time management consulting firm.
40% drop in DEX volume between December and June. Market cap erosion of 1 trillion. Right, so pretty depressing numbers. Terra Luna is the trigger. Right here it is. To cause the big fall in TVL for the DeFi protocols. By the way, I'm going to talk about it in a minute, but I put out a new episode today with the guys from Spirit Swap, and I didn't include some questions I asked at the end of the interview about their thoughts on Phantom, because it would have brought down that whole episode. But I'm gonna publish it as a separate little piece. But I will tell you that a lot of folks are looking about in the Phantom ecosystem.
So, they really are?
Yeah. Everybody is. They still love Phantom. They still believe in it. They think it's the best protocol, best chain, et cetera, et cetera. And they think the potential is huge. They're just a bit frustrated with traction on partnerships and deals, etc. So, but anyway,
well, can I ask a question? What do you think Phantom needs then? What would they want to see to make them happier?
I think they would want to see, like probably a 10th of the deals that Polygon's doing, right?
Everybody's on the chopping block and BD and Corp Dev at all these chains right now because they're all like, "What the frig, dude? You're doing nothing."
Yeah, look at fucking Polygon.
Yeah,
and even Avalanche has had some big announcements lately, right? So
well, the KKR one, right there,
exactly. But there's been a few across time. So it's not an easy thing, and here's the problem, right? So I have complete sympathy with the biz dev guys at Phantom right now because it's a nightmare. It's an absolute nightmare. Biz dev is run and gun when you have deals you can point to and when you have stability and growth in your chain. But when, you have a founder of the chain fuck everybody over and cause a massive depletion after causing a massive growth in TVL, it deflates everything, right? And then that drop in TVL, a key metric for why somebody would want to come do business on your chain, it is next to impossible to close those deals. It's just brutal. So what you have to do is you've got to build up a bunch of small deals first, right? Incentivize the fuck out of a few protocols or a few projects outside in the real world to come on and be on your chain in one way or another. You need a couple of name brands in DeFi and you need a couple of name brands in the real world. Even if it's minor partnerships, like really something minor, we're doing a one-off NFT. You just need something. So for the next deals, you can point and stack on it. BizDev is all about stacking on your rep, right? So you've got to build up the rep. You've got to see a little bit of growth in TVL. You've got to suck in a couple of little deals, heavily incentivized, so that the next people you talk to, you can say, look what we got going over here. We already have new deals coming in. If you don't have momentum, biz dev is a friggin' nightmare. It's a nightmare. So,
well, look, I mean, the metrics, things like TVL, dApps, protocols, community numbers, you have, and there's probably a few others that I just can't think of off the top of my head. Brad would know this better than I, but you have to scale those. When you're going out to develop relationships. Now, I don't do a lot of BD, but I do a lot of corp dev, which is, partnership deals, which is the same as I think we're talking about here. It's
exactly
not
partnerships.
It's not
sales. I'm talking about partnerships.
Yeah. And people.
I mean, it's a sales job, but it's a bigger sales job.
It's a relationship sale, and it's a B2B sale. So it's not like come buy this pen to one person. You sell to an organization, and so you're coming in at like 4 different entry points. I usually come in from the board, then legal, and then I come in through the fine CFO dude, and then I come in through, some other outside groups. But that way you're coming at the target from 5 different directions. And if you don't have the metrics to support, they don't take the calls. They don't want to deal with you.
Yeah.
And so then if that's happening, you got to figure out something else. How do we get them to engage? If we're not the best player, then how do we get them to do something with us anyhow? And it's usually something that's like less expensive or less complicated or less
work on their part. Work on their part. We're going to do it all for you. Our devs are going to build. Our artists are going to create.
Yeah.
We'll handle the marketing and promotion. We'll do the emails. We'll do the Twitter feed. We'll do Facebook for you. You're at a point where you have to take it all on. And if you don't have the team to do that, you need to spend the money to do it, because when you hit that precipice and things are falling off a fucking cliff, you've got to bite the bullet, suck it up, spend the money to build a base that you can build your partnerships on. Because until you do that, nothing's going to recover. And, having a whale or two drop 150, 200 million wouldn't hurt either.
Yeah, so. No, I think that, look, these relationships for this type of, selling have to be, based upon more than just a partnership. I tend to like to have somewhat personal relationships with everybody too in business, because I don't want to just be transactional. Right. And it doesn't mean that I'm want to be your best buddy. It just means I try to add some value around it and try to make it where you're going to remember me because of whatever I've said in the past or given you or favors I've done. And you also form, you socialize with them. Unfortunately, it's a little difficult, or has been the last few years, to go out and, knock back drinks with people and go to lunches and dinners. But, you go meet these people in a non-selling situation. Like, hey, I got an extra ticket to the Heat game. Dude, do you want to go? And you take them there and you don't pitch them at all.
Yeah. Yeah.
You don't pitch. You just hang out, have a great time, and leave. All you want them thinking was, God, I like hanging out with that guy because I always have a good time.
Yep.
And then, then psychologically they want to do business with you, or they start wanting to, as long as it doesn't compromise the, the relationship side. That's what you've got to do right now in this market. Right. So if I was Phantom, I'd be trying to organize something which brought all the BD, corp dev, whatever type people together from all the chains into some kind of a think tanky thing or whatever, where you shared best practices and best failures and, everything else in a collaborative way, not in a dickhead way. So send your empathetic, ambassadorial, diplomatic people, don't send your M&A team in there.
Exactly.
And, get to know everybody, because, then when you're looking for something else later on, then these people start hearing the stuff in the network. They start saying, hey, new layer 1 XYZ is looking for somebody and they asked about you. Do you want to talk to them? Yep. I mean, it's hard to do virtually. I mean, it's hard for me because I'm more about body language and seeing people and having fun. But, that's what you got to do. And you got to be in it for the long haul.
Yeah, look, we were just talking about this real quick. I'll run through these.
Yeah.
This is part of what I teach in my influence and persuasion classes at Florida International University's MBA program. This book, Robert Cialdini's Influence, is unbelievable. Absolutely amazing way to learn persuasion and influence tactics. So on that biz dev front, here's the 6 rules of influence and persuasion that are critical to basically closing deals or getting what you want out of people, between your children, business, whatever it is. Liking people,
deploying the dark arts on the kids. I like
exactly.
that.
Liking people are easily persuaded by people that they like or in whom they have faith.
Mm-hmm.
Authority. People tend to obey authority figures, real or fake, even if they are asked to perform objectionable acts. So you can refer back to the laboratory tests on getting people to shock people to death.
That psych test. And
yeah. I talk about that in the class. Scarcity. Things are more attractive when their availability is limited or when we stand to lose the opportunity to acquire them on favorable terms. This deal will only last 2 days. If you leave the building, this deal's off the table. There's only 3 rooms left at this price. That's scarcity. Reciprocity. We generally aim to return favors, pay back debts, give in exchange, and treat others as they treat us.
Yep.
That's why car salesmen will give you some feature on the car that you don't know is already part of the car, but they'll act like they're throwing it in order to get you to feel like you owe them something. That's how they keep you hooked, and that's how they can use the influence of their manager to close the deal with you. Consistency. If people commit orally in writing to an ideal or goal, they are more likely to honor such to remain congruent with their self-image. So, hey, if I can get you this price today, is this something you think you can do? Asking people to say yes over and over and over again during the course of a pitch, even if it's for little things, not what you ultimately want them to buy.
Yeah.
Having them committing to yeses along the way makes it incredibly difficult for our psyche to get out of a deal. We feel like we've already committed, we've made a commitment. And then social proof. When uncertain or making a decision, people do things they see others doing. This is huge in crypto. Influencers shilling and talking about projects, how they're investing in it, what they're involved in, people that you respect or follow. All of that is social proof. So sorry for that little tangent there, but
no, dude, that was perfect. I mean, I was
made me
looking
think
at
of
that
it
because I think of things like, the relationship. I also think of like what I call a pedestal effect or the co-pedestal effect. When you do deals with a market leader, then you're up on the pedestal with them. It gives you credibility. So, I can't remember how we got off on that tangent, but
we were talking about biz dev.
Oh, BD.
We were talking about biz dev, how hard it is, how difficult it is for Phantom in the position they're in now, how difficult it is for all of the chains right now that aren't Polygon, frankly, or Ethereum. So
who's their BD guy there that's a friend of ours? Simone, right?
No, Simone runs marketing, but I wouldn't bring up the name anyway because it's a little negative. right now.
Oh, no. I was just going to say, reach out to him if anybody's got any ideas.
Yeah, no, Simone runs marketing. He's the chief marketing officer. So, so anyway, we had all this bad news that's dropping TVL. Talked about the number of increasing crypto enforcement actions, although 21 was down compared to 20. These are SEC enforcement actions, right? But then the most important metric of all, despite the recent crash, developer activity has continued to sustain. And that to me is everything I see. Everybody I talk to in the space, everything I do, people are not stopping. People are not giving up on what they're building. People are building new things. People are trying new things, launching new L1s, et cetera, et cetera, et cetera.
Okay, so hold up. Stay on that chart.
Yep.
So no, stay on there. You're scrolling down. So that other gray bar to the left, right after the 18 peak or December 17 peak, that's the same amount of developer activity, right?
Correct.
The same shade?
Correct.
Yeah, and look what that led to.
Exactly.
Okay, got it.
Yep. There you go. All right, so that's interesting, but that actually makes me, when I was talking about launching new things, I found a new layer one to distract everybody with, except it hasn't launched yet. This was launched by the founder, trying to get him on the show. I'm trying to think of the name of it. There's an Indian exchange. It's the largest Indian exchange.
Define?
Wixel, something like that. Anyway, he's the founder of the largest exchange in India. He's launching this platform called protocol chain called Shardium. And this thing has a lot of very interesting features. First of all, it's EVM based. Second of all, it's already incredibly fast, but the scalability of it, the gas price decreases, the finality and speed of the chain increases based on the number of nodes. So the more nodes that get added to the chain, the faster and cheaper it gets. Anybody can operate a node, has low technology and software and hardware requirements, immediate finality and low latency, leaderless proof of quorum consensus algorithm, has proof of stake with slashing, and all kinds of other functionalities around nodes. High fairness and energy efficiency. I love this. First come, first serve basis on transactions. So there's no MEV capabilities. There's no minor extracted value capabilities because it's first traction in, first traction out. I mean, transaction in, transaction out. So I'm going to try to get him on the show so we can ask him some questions and hear more about what they're building. Fixed supply of 508 million SHM. That's their token. It's only on testnet right now, by the way.
I was going to say, I just clicked on CoinGecko.
Yeah. It's only in testnet right now. Has not launched. But I'm excited about it. A venture capitalist I follow invests in it, Struck Crypto, and I'm impressed with so far what I've read about the technical infrastructure on it. The distribution is node mining is 51% of the tokens will come from node mining, completely from staking, essentially. 18% in a sale, 15% to the team, 11% to the nonprofit foundation, and then 5% to the ecosystem and for airdrops. So go sign up for that testnet.
What's
wallet.
It called? Shardium?
Shardium. SHARDEUM. Shardium.org.
Oh, I just put it in the comments for everybody.
Okay, good. Shardium.org. Pretty impressive. I went ahead and claimed my 100 on the testnet. I'll help test out when it happens. But yeah, of course.
You're always in there.
It's when you have an insatiable appetite for information, you sometimes get paid for it. So that's nice.
No, that's awesome.
Anyway, really impressed with it, and of course the guy behind it is a rock star. So we'll see how it goes, but this is one I definitely want. Oh, here it is. Nishal Shetty, WazerX. Oh, also Crowdfire. I didn't know he founded Crowdfire.
You said
anyway.
.com or .io?
What, the website?
Shardium.
Shardium.org.
.org. Jeez,
.org. Yeah.
Got it. I'm just bookmarking.
Yeah. Niblets. DeFi projects need to learn that BD is not a list of product features. Yeah, absolutely. Totally true. Hey, Sean brought up earlier, and we didn't talk about it. He said the risk for ETH 2.0 is asymmetric to the downside. A working merge is already priced in. A fail at any level is not priced in, and we will see spot sell pressure after the merge for both ETH chains. Totally agree. I completely agree with that analysis, right? It's like we're already expecting it to succeed. That should already be factored into the price. We may see a little run just before it happens of people wanting to jump in. or people wanting to get something out of the fork. But I absolutely agree, Sean, that it's probably a downside move post merge as opposed to an upside move. I don't think it's going to be. I doubt it'll be too dramatic, but I definitely think you're right. And remember, all of those staking locked up Ethereum tokens, they're not going anywhere post merge. They are going to be locked up still for at least another 6 months. So there's another upgrade that still has to happen. So anyway, Sharding was interesting to me. What else? Oh, as I said, there's a new episode with Spirit Swap. I got to tell you, Joe, we talked about this last week, so I'm not going to go into a lot of detail, but this version 2 of theirs is incredibly powerful. And it's powerful for users, but it's also powerful for protocols that want to manage liquidity on Phantom. Really, really full-blown, manage everything, permissionless, composable. They're doing so many things to make it optimized for users to make money in the platform, to not suffer impermanent loss if they're in spirit holders and they're doing bribes. So give it a listen. They did a great job. I love this guys. The 4 guys that run this organization called Layer 3 that are the developers behind Spirit Swap. Just really impressive. They completely revamped the engine and they completely revamped the interface. When you go to try Spirit Swap, click on the beta for version 2 at the top, because the interface is just really sweet, really well done. Let's see what else. Oh, this was interesting. If you ever wanted to run a node, we were talking about running nodes the other day. This is not a staking node. This is just running a node to help the network. I'm going to put a link in the show notes, but there is a kind of out of the box, spin it up, run it on a VPS or on a machine in your house, and you'll have your own Ethereum node up and running in no time. Everything's taken care of for you. This is interesting. So I don't quite know how I feel about this. So this NFT project called Doodles raised $54 million from the former founder of Reddit. And look, I think the NFTs are really cute and they're funny and people love them, and they've sold for upwards of, I saw one the total collection is worth 121 million. Bored Ape is 1.27 billion. The biggest sale was 269 ETH, or $1.1 million at the time of sale, because of rare attributes. But here's the thing. I truly believe NFTs, music, video games, etc., are the gateway for crypto to the average people, right? Especially younger folks. I totally agree with it. I believe it. I think it makes sense. That Starbucks story yesterday helped us see that, there's other uses of NFTs that will also drive non-crypto natives into it. But it's difficult. Every big NFT project that raises around says, we're going to do games and music. and investors are diving into this shit to the tune of, in this one, 54 million at a $704 million valuation. And while I think there's promise for them, the fact that somebody relaunched some nice art that did really well, they did a great job of maximizing scarcity, getting people excited about it, getting influencers to buy it. Those are all great business attributes. I love it. But just because you created that doesn't mean you're going to be a master of penetrating NFTs into the real world. The people that are buying your NFTs are crypto natives. The people who you want to buy the other shit you're going to produce are not crypto natives.
Normies.
Right? Yeah. So I have a hard time. I mean, evidently they believed, the investors believe in the founders of Doodles that have the chops to do this. So I guess I can't knock that, but it's just hard for me to imagine that every major NFT project is going to break into the real world. And, $704 million valuation is pretty steep, but hey, I guess they figure they can get their NFTs out of it.
Well, look, how many of us are still trading baseball cards? It's like, it's not, from childhood. It's a little tricky. I almost feel like NFT tech is going to somehow turn into advertising, in that with all the stuff built into that NFT token contract or whatever, doing different things like tracking and monetizing and getting things. So I think NFTs, aside from the collectible side, I think eventually it's just going to kind of go in the background like infrastructure. Yeah. It's sort of I'm not talking about Bored Ape and stuff like that, because I don't really know anything about those. But I'm talking about NFTs as a tool. as a functional thing.
No, I agree. I agree.
Yeah.
Anyway, so
maybe they're thinking something like, again, maybe they're thinking something like that, you know, when they're looking at, because the Ohanian 776 is smart. So.
Oh yeah, no, he's a smart guy, and he's made great investments. And so, you know, look, it's not just him either. It's FTX, I think it's just the market,
right?
Yeah. I mean, look, I don't have the money that Alexis has, so I certainly can't speak to why he's making these decisions, and his credibility is much better than mine. That said, not every NFT project is going to score like this into the real world. So we'll see what happens.
Yeah, no, you're absolutely right. I mean, look, there's, you know, the headwinds from the environmental issue of NFTs. It has been kind of quiet lately. I haven't heard much about it, but you know, when NFT market's cranking, that FUD is out everywhere.
Of course.
So, you know, so that kind of, a little bit of that, and we kind of have to get over that perception. I mean, I think I talked about this a little bit recently, but that, you know, if you compare, I mean, again, BTC, mining costs, whatever, hashing costs, all of that, you know, what's the cost of like cutting down all these trees and making paper money? You know, and printing that and doing all of that and maintaining that system. I just can't see it being as much myself.
No.
So I think it's FUD. And I think it's the same with NFTs. Now you can mint NFTs super cheap on, you know, our buddies at Polygon and a few other ones. I think Wax has pretty cheap minting too.
And very soon there won't be any mining impact on Ethereum. But you know, my argument about mining, my argument about mining is that I always believe in the aligned incentives, right? And so the incentive for miners is to create better forms of energy that cost them less money, so they make more money on what they mine, right? At the end of the day, the most cost-efficient shit is going to be the renewables and alternative energy sources that are not climate impacting. And so from my perspective, proof of work actually can drive solutions to climate and tech coming out of it. And the incentives are significant enough, the money is significant enough that I have no problem with proof of work. I actually think it's a positive for society. So
I think it's net positive too. I mean, this is just on the effects of it, not on the underlying premise of, say, the algorithm of proof of work or the art of that, which we all know has a tremendous amount of value too. But I think in this process, that I think if you directly compare, let's say, carbon costs of the mining overall versus all the other costs that it's replacing in other industries, I think we're net positive. Yeah. And I think that BTC could do what Polygon did in some way, shape, if they really felt bad about it or needed to, do some deal with a climate type entity where you're getting carbon credits and doing things there to offset. I mean, it's not that hard. Yeah. And I think because it's not a real big issue in my mind. So I think that's the same with NFTs, but I didn't even think of the fact that you said, Brad, that with ETH, which is where I'm primarily thinking of NFT minting costs.
Yep.
Those are going to plummet.
Well, the costs right now for minting aren't too high, but at post-merge, we're not going to see a massive reduction in fees, but we will see the lack of proof of work mining associated with NFTs anymore on Ethereum chain, right? So that's actually an advantage that Polygon currently has that they will no longer have. They'll have to, the NFT advantage for them will be price, because Ethereum, you'll still be paying, I think right now it's like $3 to $5, you know, a transaction. I haven't done any direct ETH-L1 transactions lately, but I would assume that. So,
yeah, threw this one up.
Oh yeah, well, I knew this was going to happen. They telegraphed this.
Yeah, they were telling everybody.
Exactly. Look, I gotta believe. I have to believe that the folks at Galaxy figured whatever comes out of this lawsuit was going to be cheaper than whatever the fuck the problems were with BitGo.
Yeah. I mean, I'm just surprised that there was, I mean, I haven't looked at the term sheet, but I'm surprised there wasn't a breakup fee in here. I mean, if I was BitGo and Galaxy.
There probably was, but I bet Galaxy did it on the basis of cause, because they were claiming that BitGo couldn't provide the financial documents to back up their claims.
So it was a due diligence thing. Yeah, you can, I mean, usually there's only like a no shop clause, a confidentiality clause, and I think that's about the, oh, and the exclusivity clause. That's about the only thing that's usually binding in a lot of these. Now, I don't know. This is probably a heavier term sheet, but go ahead.
This article says it was held up because the SEC held up Galaxy's decision to plans to reorganize as a Delaware-based company. They were waiting on the U.S. SEC on its plans to reorganize as a Delaware-based company because currently they trade in Canada and they want to list on NASDAQ. But at the time when they bailed on the deal, they said that they were bailing on it because BitGo couldn't give them the financial records that were required for the agreement. So I'm not sure which is the truth now, but yeah,
it'll settle. It'll settle. You're right.
Of course. This is just posturing to get a negotiation perspective. Let's see if there's anything else exciting here that we had queued up, Joe. I think.
Is that all? Let me just do a quick double check in this feed real fast that I sent over.
Oh, Maker is turning to staked ETH to reduce the USDC influence.
Yeah, they supposedly got spooked by, I think CUSDC blacklisted 38 wallets that were integrating or doing stuff in there. And so they're like, uh-oh. And so now they've raised the loan limit or the debt limit so they could bring in more staked ETH to dilute the USDC, I guess, influence on their treasury or balance sheet.
Okay, well, that's a good move.
Yeah, it's kind of what you talk about a lot. I sort of saw that and I was like, huh.
34% of all assets locked on USDC are in Maker. And the tokens are the single largest source of collateral that backs DAI. Maker's stablecoin.
Yeah.
Approval of the proposal to raise the ceiling to $200 million allows STETH to be deposited against DAI, reducing USDC's influence. That's smart. Very smart. I mean, there's some risk inherent in there, I guess, but because of the volatility of ETH, but
well, I think they also got tired of being, DAI being called the wrapped USDC.
Right.
I think they want the DAI brand to be independent, and not people not to associate it with, an ability to blacklist wallets. I mean, like we talk about. I mean, it's just different rules, different products. I'm not saying anything negative about USDC. I'm just saying that people that don't want that will choose other ways to do it.
Yep, absolutely.
So
that's all I've got for the day, Joe.
Me too. I guess, I would say, things seem to be where they were when we started. I'm going to watch to see what happens the rest of the day with the U.S. equities to see where they close out, if there's any rallies. I mean, I was looking at Nikkei futures earlier. I think I still have the tab up. I mean, let me see where they are exactly. Yeah, I mean, those were going down. They've kind of stabilized for the last, looks like from about 12:30 on. But, the reason I watch those is, I mean, I guess the guys that really know how to do this already know this, of course, but when you watch capital flow across the globe, 24 hours, it's going, Europe, US, Asia on that route because of the clocks. So I always look at the European stuff, DAC, FTSE, CAC, all of those to see what's going on in Europe before I look at the futures for US market in the morning. And then I always keep track of Nikkei because after US closes, you look where that future is, and that's, kind of like where they think it's going to go the next day. So what you got to do is get one day where, like, say, US tanks and Nikkei goes up, and then it breaks the cycle. But when you see everybody going down, then I just wait for one to dislocate from that sequence. But it hasn't yet. Nikkei's off. I mean, 1.85%. That's not that bad.
Yeah, S&P's down 3.04 off of yesterday's close. I mean, it's kind of a, it's just, these are 3.4 point moves. I mean, it's kind of like, if you're a crypto person, but below
those are big moves in equities. So,
yeah.
But that's just reshuffling. When something like a CPI print happens and it causes everybody to change, expectations on rate hikes. Remember that the rate hike number goes into the cost of capital when companies are valuing their businesses. And when you value a business, for the most part, the tech and things like that we operate in, you tend to value it on what's all the future cash flow going to be. and then we discount it back to today's dollars, accounts for inflation and all that stuff, to say net present value, this is what it's worth today.
Yeah.
And then so when you change a part of the denominator of the equation, it has a pretty significant impact on stock valuations, because all the algos run automatically on it. There's not a trader sitting there going, oh shit, it's just the computer's doing it all. And they're like, okay, we repriced everything. And so that's when you see these big sell-offs of like 875 points or so. It's because of that. But they're buying in other places too. So it's not like, it just kind of resets the bar. Where's the value? Right. And so that's what it has. But it's nothing, if it was off 10,000, then I'd be like, oh, okay, now we got something to think about here. But, in these days and times, this is really nothing. It'll come back, and it has to happen. Remember how much liquidity has been pumped into the market since 2008 across, let's just say Europe and US. I mean, I think it's 20 to 25 trillion dollars. I think 12 in the US and whatever in Europe. Got to be pretty close to that since they're bigger than us. Some level of that has to come back out.
Sure.
Not all, because the market's grown tremendously. The economy's grown tremendously over the last 14 years, but some amount is like, fat. Slop, and it has to be chopped out. And that's what this is. So I wouldn't make any big panic moves if I was anybody out there. But, I'm talking macro here. In crypto, obviously, we're watching a merge. And, I would be very concerned about the sell the news component, or buy the news, sell the event component of this.
Right.
Myself. And I think we're already seeing a little of that. But I don't know. We'll see what happens in the next 3 days.
Cool.
So not financial advice. I'm trying to help everybody. Just my thoughts. There's 50 other people that think I'm full of shit. So, and 2 of those are my ex-wives. So,
hey, thank you everybody for watching and listening. Please just take 2 minutes when you get a chance today. Open up Apple Podcasts or Spotify and give us a rating and a review. It really helps boost us in the rankings, and is greatly appreciated by us. Thank you, Sean and Niblets, for participating today. And anyone else that's out there listening that thinks they have some thoughts or ideas, do not hesitate to join into the chat every day live at noon Eastern, or send us your comments on YouTube and or in Discord. We would love to chat with you sometime. Mission DeFi Discord links is on the missiondefi.com website. And we always appreciate your feedback. If you're watching on YouTube, please click on the subscribe button and click the little bell to make sure you get notified when new episodes come out. And that's all I got for today, Joe. Have a great evening.
And don't forget to listen to Brad's episode on Spirit Swap.
Thank you, Joe.
I told some of the guys that I know at Treasury, one in particular, probably listening right now, went off to a nice boutique consulting firm covering digital assets. Nice. And, these are like high-end policy type guys. So it's really impressive. So I steered them to Mission DeFi, said, you want to understand DeFi, go there and see everything that who Brad's been interviewing. So I recommend that to anybody. MissionDeFi.com. All the DeFi lunch stuff is there too, but you might get bored listening to me just, hem and haw for an hour with Brad.
Joe's Alpha is up there and archived for the world to hear.
But hey,
thanks everybody.
My Twitter game, up in my LinkedIn game, so follow me, guys.
I see that, man.
305.
Yes, sir.
You like
we love it. We love it.
All right, cool.
Keep it up. All right.
Bye, everyone.
Bye, everybody.